Cozier is the president-elect with the Association of Mortgage Brokers, the Silicon Valley chapter. And Don, you're one of our own, basically, because you help unify our industry. But at the same time, what I like is that you also are working to protect the consumer.
Absolutely.
And so why don't you tell us a little bit, our viewing audience, a little bit what the California Association of Mortgage Brokers are all about.
Well, the association itself has kind of a double-fold obligation and mission. And one is obviously to help the mortgage brokers in the community understand what's going on in the mortgage lending industry, be as educated as possible about new laws and things that they need to take care of on their side of the table, and also to help out the consumer with their finding of a correct loan for them, and also be educated as best as possible from a consumer standpoint on the loan industry.
Okay. Now, one thing is that that we see is that, first of all, when you talk about unifying mortgage brokers, and it might be a tough question to answer, but just how have we not maybe been unified in the past? And I know one thing, when I do a mortgage loan, we have all sorts of our clients have to sign a lot of papers and everything else, but how have we not been unified? I know if we had it our way, it'd be a loan application would be like 3 sheets of paper. They just sign everything and be fine.
Right.
But it's not that easy.
That's correct. A couple of things that they do is, from that particular angle, would be to try to get as much uniformity within the mortgage industry so we can get down to that ultimate 3 pieces of paper that they can sign situation. Another thing that they're trying to do is look for ways that they can get tips to the consumer that will allow them to get the best product for their needs, and to be able to have the mortgage broker themselves be as educated on those new products, new laws, as I said, coming at the beginning of our section here.
Okay.
I think one of the things that, as a unity, that I have not seen happen in the past is that there's a lot of legislation that does come down, and a lot of times there's advocacies on the other side of the table that are maybe well-meaning, but they don't hit the mark. And so we need to have a community that has a voice that can go to the table with the legislatures or with HUD and say, here's the other side of the coin, here's the opposite end of what you're hearing here, and we need to protect the consumer, not hurt them by well-meaning legislation.
Sure, and I think, that's one thing is that why I'm excited about having you in that position is that a lot of times that we'll find out after the fact that some legislation came down that is really kind of cumbersome to us to go ahead and carry out our business and to carry out our work. Now, let's talk a little bit about the Code of Ethics, because a lot of these things have been, like a lot of the forms that we have these days are disclosures of this and that.
Right.
And when you have things like that, you're assuming that there's been problems before to where maybe our associates didn't do their job or something.
That's correct.
So talk about a little bit about the package of disclosures and why we have so many, and which ones do you think could be eliminated, or what the remedy would be?
Sure. I think that for the most part, most mortgage brokers do try to do the best job possible. I think that that's evident. However, it's best if you can have things written down that you have a standard to go by and check off against on a regular basis, no matter what industry you're in. So members of the association, CAMB, they subscribe to a specific written down code of ethics. One being, that you have ethical manner in which you do business, that you have full disclosure, that you're as professional as possible, that you follow the guidelines of the lending industry, and that you are going to have full disclosure to your clients so they make the best informed decision when they're getting a loan. Because one loan doesn't fit all, and so therefore there's many, many options out there.
Exactly.
Right.
Well, we're going to come back. Don Crozier is our guest. He's with the Silicon Valley chapter of the California Association of Mortgage Brokers. He's the president-elect. And when we come back, we're going to talk a little bit more now about the consumer and how they're protected with this organization. We'll be right back.
Excuse me, are you Santa Claus? If you are him, here's my list.
Help the Marines make Christmas possible for less fortunate children. Donate a new toy to Toys for Tots.
Yes, Santa Claus.
We're back. Don Crozier is my guest. Once again, he's the president-elect with the Silicon Valley chapter of the California Association of Mortgage Brokers. And Don, we just talked in the first part about how you as president-elect, you unify the body of mortgage brokers. We're all on the same page. That ultimately, though, that we're there to protect the consumer. Because let's face it, in the back, you've heard of loan sharks and everything else, and 99% of us we work ethically and everything else. But now, what are some things that say that we have done as an organization to protect the consumers?
Well, one of the most recent things is that we had a complete grassroots effort to get the word to HUD that the new proposed HUD ruling that would have come out this year has been put on the back burner until next year to be relooked at again, because the advocacy groups that were purporting this really had it a one-sided, and the banks and savings and loans, which are not in the mortgage brokerage community, would not have had to follow the same rules that the mortgage. It was strictly aimed at, I believe, unrealistic and not a level playing field environment, where the bank savings and loans would not have had to disclose a lot of fees, which actually right now they do not have to do that either, but where the brokers would have to disclose everything. And as one of the real key points in it was that we would have to give, with no tolerance, guarantees on third-party fees, such as appraisals, credit reports, escrow, that sort of stuff. So if we had something that went wrong and you had to have another $100 or $200 on the appraisal fee, which we had no control over, the mortgage broker would actually have to pay that, or you have to decline the loan and not be able to do it. So it really would put the consumer in a less favorable bent. You could see that maybe a lot of brokers would have to go out of business because of that, and that they would not be able to get any kind of a premium yield spread, as we call it, or rebate pricing to take care of the cost.
You know, we were talking before we came on the set here, and I didn't know that was the case, that the banks, the direct lenders that say, I don't mind going forward, the B of A's, the Washington Mutuals,
right,
that it's not necessary for them to disclose all the fees.
That's correct.
But the other thing too is that I assume that they're all licensed too.
No.
And that's not correct either.
No, the bank savings loans do not have any of the loan officers that are Department of Real Estate licensed. So that was one other reason why the mortgage brokerage community, I think, is a good place to go for a source with honesty and integrity, because we do have to be licensed, we do have to have continuing education, and not only does the Department of Real Estate ensure that does happen through our licensing process, but also CAM in itself, we have monthly educational meetings both for the association members as well as the consumer to get as much education out there. I think both sides, if the mortgage brokers community and the consumer are educated, you now have something that's very workable.
Well, Don, I want to applaud you and I want to encourage you to go forward with that, because it's, like you said, a level playing field, but ultimately those people who are taking loans directly from a bank, that they're not getting the full disclosure.
That's
I
correct.
think that just doesn't seem ethical. But let's move on from that point anyway. I want to talk about maybe some consumer tips. You had mentioned there's 10 consumer tips that would help people in acquiring the best loan.
Right. These consumer tips actually can be received on our website, which is www.cambweb.org.
Okay.
And they can also receive referrals to those that are in the association if they want to look up a mortgage broker in that way.
Okay.
But as far as the tips, one of the things right off the bat would be, and I think personally from my own practice and from the tips that are put out by CAM, that you want to find somebody that you can trust and that you feel has integrity and that has a wide array of products that they can service you. That's one of the things with banks, that they only have one source, their bank. Mortgage brokers have many, many sources.
Don, I got to ask you to go down quickly. We just have a minute left.
Okay.
Someone you can trust.
Sure, somebody that you can trust. That definitely shop around, be as competitive as possible there. That to know that you have 3 days in which to cancel a loan.
3-day rescission.
3-day rescission on that. To make sure that the loan officer is licensed and is licensed to do mortgages, and that you can receive the referrals if you want on our website at camweb.com. Excuse me, camweb.org.
Okay.
So.
We're going to have to stop with that, Don. We want to have you come back on. Will you come back on some other time?
Absolutely.
Okay.
It's a pleasure being here. I really appreciate the opportunity to be here.
Great. Please visit our website, reweeklytv.com, because that way we'd like to get a hold of Don if you'd like to contact him, and then we'll direct you to his website. Thanks for joining us for this segment. Don, thanks for joining us.
Okay, appreciate it.
And right now it is our economic update.
Welcome to our economic update. As we told you earlier, Dan and Brian and I are going to be discussing the year 2002. Gentlemen, what did you think of this year? Any comments?
Well, first of all, I do want to say that, credit you, Dan, where you had predicted that they were going to raise loan limits. I think a week after you said that on our program, they lifted them. And so I think that's one thing right off the top is that's an important thing that we went from $300,700 to be a conforming loan amount to $322,700, and to a lot of people that really affected them who needed the extra cash out, let's say, to do some work around the house, or some people that had a jumbo loan, because a jumbo loan, just throw in a nutshell, jumbo loan is about 1/4 to 3/8% higher in interest rate. So that little action right there, I think, saved a lot of people who were right on the bubble between a conforming and jumbo loan, saved a lot of money.
Well, thanks for that compliment, by the way. I don't always foresee what's going to happen, but that one was somewhat predictable, actually. But, you know, when I look back over the year 2002, I see just huge opportunities for what homeowners were able to capitalize on, and it's this big refinance boom. We experienced a big hit to our stock values, 401ks dropped, so we were all a bit waning from that. But when the Federal Reserve dropped rates so aggressively this last year and even into the previous year, but the buildup of that reduction of lending rates caused such a benefit for people, in that many of my clients are saving $400 to $500 a month from what they were having to pay before. They were consolidating debt, which was pouring more savings onto what they had. And I just hope a lot of you are investing that difference and not spending it again, because that would be a tragedy if you were. But that refinance piece has just been remarkable. To have 30-year fixed rates as low as they were, sub 6% rates for a short period of time, but even where they are now in the low sixes, you know, it's just incredible. I've been in this business many, many years, and we've all heard the reports from the news that, you know, 40-year low rates, and it was true, and it caused just huge savings and benefit. We all had to be a little patient because the lenders were overwhelmed, but it was a remarkable time.
Yeah, and it wasn't only nice for refinancing, but a lot of people were able to get into their first home that maybe had been waiting on the sidelines, waiting for that opportunity to get in, waiting for home
Great
values
point.
to drop, and have interest rates low enough to make their monthly payment affordable. So
Yeah, and they may have been able to, instead of afford a home that was worth this much, because the values of interest rates had dropped so much, they were able to maybe go $50,000, $60,000 higher for the same payment, maybe even more. So it was just a wonderful enhancement. So they might have been able to buy a house without doing the home remodeling internally.
And as we end the year too, it was funny because I think there was times when it was actually more of a seller's market at the beginning of the year. I think it went down to a buyer's market, but then there was a little hiccup there, and I remember it was funny that for about a month period, it became more of a seller's market where there was multiple offers, and that's the key mark, you know, as far as if it's a seller's market or not. And now as we're going towards the end of the year, I think we're seeing that now. There's houses on the market, buyers have a lot of selection. Now it's kind of leaning towards a buyer market, a great time to buy.
And the time to select a home, and not just, oh, it's one's for sale, here, and make an
Right.
offer. At least you have a time to look at it once or twice and decide if it's the right home for you. It's a great time. It's a great time to be a buyer. And I'm really excited about 2003.
yeah, I think next week we're going to be discussing some things that we might see coming for next year. We
So
don't
much
know
positive.
exactly what's going to happen, but some of our predictions and some of the opportunities, like we were talking about before, for first-time buyers and where
Yes.
interest rates might be headed.
Yeah.
Yeah, that'll be interesting. I know we want to save for next week, but how did you guys look at next year as far as, I think we're going to roll right into the rates are still going to be low. There's some question whether the economy is going to recover and whether they'll reduce rates even further. I don't know.
The likelihood that they're going to lower rates further, I think, is probably very low in the percentage.
There's a
Because-
10%, I think, is what they're saying for the
Yeah,
January
10%
29th meeting.
probability. I mean, just because they're so low, it's unlikely they're going to do it, but what it means is they're going to keep the rates low, because when someone has a twisted ankle, you don't take their crutch away and tell them to run a marathon. So, and that's an analogy to the economy. The economy is getting better, and they're showing signs that the predictions are 2003, third, fourth quarter, maybe we'll see some revving up in the economy. They're saying 2004 and 5, definitely big turnaround in the economy. So what that means is interest rates, for those who haven't actually got to it, they better move along, because soon the rates are going to start going up. They may trickle up, but you still have an opportunity to take advantage of lower rates. But we're going to see pretty much, we're going to be floating or bouncing on the bottom for probably 4 to 6 months, I think.
You know, Tracy, I know next week we have Linda June Castillo coming on. And not to put a damper or cloud on this as we end the program, but I'm wondering, or fungus on this thing, but I'm wondering how that will, if there'll be any problems with insurance issues going into next year is because of the mildew fungus thing going on. Anyway,
We can ask
We'll
Linda
talk
Jean
about it,
Castillo.
yeah.
She'll
Something to
know
ask
about
her
that.
next week. That's right.
Thank you for joining us on our economic update. And next we have our viewer mail. Welcome to our viewer mail segment, where we answer your questions sent to you over the website, and some of you call in and ask us questions. We're here to answer those questions right now. Who wants to start?
I'll start, Tracy, but I'm going to embarrass you for a second
Okay.
here, because Don from Cupertino was asking, is Tracy Pierce, the new interviewer, is she single? And why don't you go ahead and let's, end all speculation right now, Tracy.
Oh, until May I am single, but
Fundamentally, no, she's not available anymore. You had your chance.
Get her
but
right down
Yeah.
to it, Don. No.
be married in May.
It's not
She's
possible.
marrying a wonderful man, and you're very lucky to have met such a nice person.
I am very lucky.
So, no, but on a serious note, Carl from San Jose was asking, is there still 100% financing available? And I know a lot of people, because we mentioned earlier, Dan and Tracy, that people, because of the stocks and everything else, have taken a little bit of beating. A lot of people don't have money to put down as a down payment. They're fortunate to have a job right now.
Yeah.
So, but
Another point, I'll let you answer the question if you'd like about what's available with 100%, but what's nice about having the availability of 100% financing is that someone's stock values may have dropped and they don't want to sell them because they're so undervalued and they feel confident they're going to come back. They just want to hold on to them and wait for the economy to rev up.
Sure.
So 100% financing vehicle allows them to not have to liquidate those stocks. They can hold on to them, get a mortgage that covers the entire purchase price. They get all the benefits of home ownership, and yet they end up with the best of both worlds. Maybe a little higher interest rate than a normal interest rate, but don't forget the key to doing this is getting a home. Second, loans
foot in
are
the
always
door.
secondary.
It's a great point, and it actually leads us right into the question from my client, who is Mike from San Jose. He was asking me if he should think about buying a home early in the new year, or if he should just wait and see what's going on with the economy. And Dan, you always tell your clients this, and I tell my clients this as well. It makes sense if a mortgage payment works for you, and you can get into the house right now, why not do it now? You can always refinance down the road. If you have an adjustable, it's a low start rate, you get into the house, and sure, it's going to adjust in 3 or 5 years, but that's okay because there always is refinancing. So.
well, Tracy, I say that to my clients too,
Well, a
I think I have heard you say
No,
that,
I'm just
Brian.
teasing you.
Yeah, well, a great thing about what you're saying is that 100% financing transactions, when a realtor presents that 100% transaction to a buyer or to a seller, if a seller is looking at someone who's offering 100% against someone who's got 20% down, they'll probably take the one with 20% down because their thought is there's less risk, it'll be easier to get that loan.
Right.
So of course, might get pre-approved. But secondarily, right now, it's a wonderful time because a lot of people aren't out buying, so you won't have as much competition. So you're going to get a home that might be willing to give you a little bit of a break in price, as well as not having a competition. So you might get that home because you'll be the only one offering, possibly. So they'll be receptive to the idea that you're 100%, especially if you're pre-approved. And you can get that house, and it's your first home. Don't try to make it your house to end all homes.
The bottom line too with that is whether it's 100% financing or this market is that it is leaning. If we want to label it a buyer's market, well, maybe that's what it is exactly right now. So anytime that you can label it buyer's market is a good time to buy. If things swing the other direction, rates go up. See, that's another consideration too, is that all of a sudden if rates go up, you knock yourself out of the position to buy because now maybe your debt to income ratios are too high. So the bottom line is that I think that for your client that yes, it's a good time to buy. If there is a 100% program out there, there is some 100% programs. I think I need to go through them real quick, is that typically, and I think Dan, you alluded to this, is that it's going to be a Band-Aid type of thing. It's going to get your foot in the door, so you're going to be mowing your own grass. You'll be trimming your own bushes and everything else.
Getting
It's gonna be
tax
your house.
deductions, a mortgage interest deduction.
Tax deductions, but you can expect that these are going to be like 2-year loans. They're a Band-Aid loan to get you in the door. They'll have a reasonable interest rate so it can work because it's got to work for you, but it's also got to work for the lender. And the idea is to get inside there and hang
Be a
in there for
homeowner.
2 years and then refinance from there.
It's a great point, and I think that's why all of us like being mortgage planners. Is it's very exciting helping people understand
It
all the
is.
benefits of home ownership, the tax deductions, you
Yeah.
know, moving homes and changing loan programs to what's appropriate for you at the time. Anyway, thank you for joining us on Real Estate Weekly. We'll see you next week. If you'd like any information about one of us or any of our guests, please email us at reweeklytv.com.
Thank you.